Hi, welcome to the final market alert for 2015. Today is the 31st of December 2015. And yesterday the market very, very quiet. Characteristic really of a New Year's Eve as opposed to the penultimate day of the year. You can see here the market just trading in less than a 50-point range, and after the first losing trade and then making it up on the second one, it wasn't really worth staying and watching. And you can see during the quiet period it really was quiet there, a range of around 20 points, and then something happened after the market closed that sent the market down 30 odd points in the first bar, and then the market found some support, and at the moment we're on our way back. So you can see prices finding support there at the 17,600 level. So I don't know what that was. But in the daily chart, you can see the slow grind down to the downside. Most of this happening in the pre-market session yesterday, and now the market reversing and starting to move back to the upside. I'm not sure whether today is a half-day trading. It could be, it might be, and it may not be. I can't seem to find anything on whether it is going to be or not. So I will have a look around and I'll put it in the email that I actually send out, just to be on the safe side. I know in the news here we've got a holiday for Germany, and I know the UK stock market is half-day trading, so it may be just worthwhile just standing aside today anyway. So what else have we got here? Unemployment claims for the US, that's the normal weekly US claims, and then the Chicago PMI. So not a lot to move the market anyway, so it may be just worthwhile to leave things alone, and then Monday everything gets back to normal. Which reminds me, the next market alert will be Tuesday morning, unless there's anything major that happens today that sends the market into a tailspin. Other than that, that's about it really. The good news is that getting back to everybody being back at work next week will certainly increase the volatility, and also we can now see how Yellen's increase in interest rates is going to affect the market. It's funny how nothing crashes when they all go on holiday. I'm sure they don't want to get indigestion from their turkey and Christmas meals and food, but wait until they get back, and then I would imagine there's going to be quite an increase in volatility. And I think 2016 is going to be a year where you'll see this Ponzi scheme that's been run up for years now, for the last 5 years, start to fall apart. After trading back up to the highs initially, I would have thought, just to suck in those who think that the market is going to continue higher. But when the rest of the world is considering going on to zero rates, the US have decided to put theirs up. The economic data is bad, and it just begs the question how long they can actually keep the rate as it is. Any decrease will see the credibility go down the pan along with the market. Right, that's the cheery news for the new year. I will see you in Tuesday's market alert. And just before we conclude, let's just have a quick look at the implied volatility. 1393, it was slightly yesterday because the market was down, and that's shown in the chart there. Right, that's it. Wishing you all the very best for 2016. Look forward to speaking to you on Tuesday morning. So however you celebrate the new year, hope it's a good one, and see you on Tuesday. Thanks for watching. See you in the next one.